As you understand, how to choose sector or industry based on your circle of competence for stock investing. Now, it's time to get into details and develop understanding of business analysis framework. In previous session, I have provided overview of business moat analysis framework. We classify moat analysis into three broader categories. The first part of moat analysis is to define your business along 5 parameters. The second part is to perform competitive position analysis and moat classification. Lastly, financial statements analysis to confirm existence of moat. In this session, let's focus on how to define your business along 5 parameters, creating investment story. There is a structured approach to develop good understanding of company that you are planning to invest. We define business along 5 parameters to get significant insight for investing. You can gather information to analyze companies from various sources like company annual report, investors presentation, company website, customer feedback, credit agency reports, and so on. Let's start with product and take a closer look at few questions. Are companies' products being goods or services? Goods are the material items like television, refrigerator, soap, paint, and so on. Services are the amenities, benefits, or facilities like banking services, travel, entertainment, and so on. There are typically 6 types of products or services that long-term investors should be interested. First, short-lived products with well-known brand name. Second, provider of products that always must be purchased. Third, providers of products that are in demand due to external regulation or influences. Fourth, provider of the cheapest products in the market. Fifth, companies whose products are sold at distinct premium due to brand, technology, or quality. And lastly, businesses that have very high level of scalability. Moreover, you should look for the products that are in market for several years and will sustain several years ahead. There are many companies that you can classify under these categories and ensure they are good consideration for long-term investment due to one of these distinct advantages. The next question you can ask: how do business make money? This sounds like a simple question, but it is critical for you to summarize how your business generate earnings. If you can't understand how business makes money, then you should not invest in it. The next important question you should ask: are these revenues recurring? It is easier to forecast the future of business with recurring revenues like short-lived product, subscription-based products, or services. The business with recurring revenues is less dependent on new products. A business does not have to continually come up with new products or services to maintain their sales. The next question you should ask: is it a cyclical business? Cyclical companies are sensitive to the business cycle and economic activities. It includes businesses such as commodity, construction, hotel, airline, semiconductor, and so on. Their revenues generally are higher in periods of economic expansion and lower in periods of economic downturn and recession. Cyclical industries can suffer a lot during recessions and are prone to bankruptcy if they don't have the cash or strong balance sheet to sustain long recession. Investors should exercise caution while investing into consumer cyclical business. You should not get trapped due to low valuation during economic downturn unless you understand the market cycles well. The next important parameter is customer. The quality of any business is determined by the quality of its customers. At the end of the day, they are the stakeholders who determine fate of a business. You should evaluate business from customers' perspective rather than your own. The customer analysis starts with the question: who are companies' core customers? The customers are generally the direct consumer or organization. Consumers are the people buying goods or services for themselves or their families. Organizations are corporates, government, associations, and so on. The next thing you should determine, is the customer base concentrated or diversified? A business that earns its revenues from a diversified customer base has less risk than the one with concentrated customer base. If your business is dependent on few customers, then it really doesn't have pricing power. Moreover, the loss of one big customer can have severe financial impact. Is it easy or difficult to convince customers to buy the products or services? If your business needs to rely on aggressive sales and marketing, then the product or service is not being sold based on its merits. Such businesses typically do not have sustainable model and are typically not good for customers and investors. Is the customer dependent on the products or services from the business? You should determine if the products or services falls under the category of need to have or nice to have. The more customer need to have products or services, less the earnings of a business will fluctuate. The more discretionary a product or service, the more earnings will fluctuate. For example, customers can delay travel plans, buying a new car or house in case of financial hardship or economic downturn. Please remember, more a customer needs to have a product or service, the less the earnings of a business will fluctuate. Let's move on to the next parameter. The form refers to the way how the business is structured legally and operationally. It's important to understand how your company is structured legally and operationally to analyze impact of government policies, rules and regulations, external events, economic cycles and so on. Legal form of businesses like banking and financial services has to deal with RBI regulation, interest rate and so on. Pharma business is dependent on drugs regulation, patents, and their expiry. Tobacco industry is highly regulated by government and generally imposed with heavy taxes. Operationally, your business can be a franchise, subsidiaries, joint ventures, holding company and so on. Business capital requirement is another important aspect to review. Commodity business needs access to huge capital to grow since their earnings are directly related to tangible assets. You should focus on businesses that are capital light and can grow quickly without having to high investment into assets. The next important parameter is geography. Geography describes where the business customers and operations are located. Geography can expose some issues. For example, Indian technology companies have more than 80% of their customers from North America and Europe. Moreover, 20% of their operations are abroad. It's necessary to understand geography where they do business since various things can impact their profitability like local government rules, regulation, economic growth of that country, currency exchange rate, availability of skilled professionals, visa and so on. Another example could be Indian pharma companies. Their customers are mainly located in Africa, North America and Europe. Their business can get impacted due to local government rules, regulation, drugs approval, global competitors like China and so on. The next important parameter is growth. You can review company's annual report and financial statement to understand its prominence, transformation, and growth over the decade. You should look out for any other merits signaling out like ability to raise capital at lower interest rate, kill competition by acquisition, pricing power, R&D expenses to support innovations and drive future growth. You should look out for business competitors and how does your business stand with the competitors in terms of market share and profit margin trends. It's very important to ensure your business is generating free cash flow. Moreover, you should check how management is reinvesting free cash flow to drive future growth. This is the single most important thing to drive long-term growth. I hope next time when you look out for a stock investment, define your business along 5 parameters creating investment story. You can leverage this framework with certain customization depending on the nature of business. Over the time, you can expect significant improvements in your investment decisions. Thank you.